Andy, I got your latest release last week, and I kind of had to do a double take on some of the numbers. They're not good.
Yeah. I mean, whether you're looking at prices or you're looking at volumes, both have been pulling back a little bit. I mean, if you look at the number of folks out there locking in rates to buy a home, down 30% from last year, second month below pre-pandemic levels, lowest August since 2017, and you're starting to see prices come off those peak levels as well.
We've said this stat a few times, but I think it bears repeating for the folks in the back. The reality is about 90%, according to Ivy Zelman and some others, about 90% of all American mortgages are what? Below 5%, 80% are below 4%. So if you're thinking about moving and you're looking at a 6% mortgage, you're sitting on a 4% mortgage, and the house is more expensive that you want to buy, I can see why buyers are balking. You get smacked twice.
Yeah, and you're seeing sellers balk out there in the market as well for that exact same reason, right? They're locked into low rates, but I think a lot of folks are also tied into some of those prices that were being paid in March, April, and May of this year, and trying to understand, was that a mirage? Was that reality, or those true comparables in the market? And so I think they're looking at their own rate. They're looking at the prices they could have gotten a few months ago. And you're certainly, especially in that August data, you're starting to see some of those sellers also balking at the market. You saw inventory growth at roughly a tenth the rate that it had been, according to our collateral analytics data over the last 3 months. So you're seeing buyers priced out. You're seeing sellers balk a little bit, and that means lower transaction volumes. That means prices coming off peak a little bit as well.
That sounds like a bad combination, Andy. I mean, where does the data suggest this might be heading?
I mean, if you look at the latest data, right, and we're looking at that kind of real-time optimal blue rate lock data coming out of the market, you're seeing refinances, as we all expect, to continue to trend downward. You're seeing that purchase lock volume continue to trend downward as well. And each month they keep coming lower. We also just, again, got our monthly snapshot of that collateral analytics data. That's kind of the daily stock ticker of what's going on in the market. Median price per square foot is down 4%. From where it was the last few months. So each set of numbers that's been coming out, prices have been edging a little bit lower, transaction volumes edging a little bit lower as well.
If we see mortgages cap out here, the Fed may keep raising rates, the bond market could move, but the mortgage market lags, and maybe a lot of the bond market's already priced in expectations. So let's say mortgage rates, this is the peak. Does the market then, you think, fix itself, or is this level? I mean, it has to come down.
Well, I mean, the way that it fixes itself is one of three ways, right? It waits for incomes to grow to kind of normalize and kind of bring us back into balance. We would need 40% income growth at where prices are right now to get us back to a norm-term level of affordability.
40% income growth.
Or zero, yeah. Or interest rates coming down closer to that 3 to 4% range, or prices continuing to pull back, right? So I think it's one of those three things that brings us into balance. But the market just simply, where prices and incomes are at right now, it's just simply not built for a 6% rate environment. And that's what you're seeing take place out there. You're seeing the market choke on those 6% rates based on where incomes are right now and where home prices are right now.
I don't know how old you are, Andy. You look young. I'm old enough to remember when 6% was low.
Right.
I mean, I remember hitting 6, and I'm not that old. I'm not 180 years old. I remember when the 6% of the downside, we're at 6%. Good news.
Right.
How do we get into that? How do we get into this? Why is it now that 6% is doom for the housing market?
Right, and we're having that conversation more and more. I've already had that conversation this morning as well, and you're absolutely right. If you just look at interest rates themselves, 6% is low historically, right? So that is true. What's also true is that home prices will normalize themselves based on interest rates. So if you look at what's happened over the last 5 years, interest rates coming down 3% means your buying power goes up 30 to 40%. And you'd like to think homeowners put that money in their pocket and they're saving it and they're doing well. What they do is go out there and bid up home prices, right? So we've seen home prices rise by 60% over the last 5 years, 4 times what we've seen in income growth. And now we simply can't get back to that normal level.